Now, let's switch over to what I know you've been waiting for, the market update. Let's begin with Ethereum. Price action, a little bit of a bummer. It's a little bit of a downer. If you tuned into yesterday's stream or you were watching the market update on Token Metrics TV, you got an inkling as to why. Let me summarize it. There's trouble in the legacy world. A big company called Evergrande has $300 billion worth of debt. Okay, they were borrowing money from the bond market and using it to pay dividends to stockholders. In other words, it's a questionably run company, and all that debt they may default on it. So it's causing stocks to go down. It's causing a lot of problems. And now in Ethereum, okay, the 21-day moving average is crossing below the 50-day moving average. This is a sign, along with our visual trends indicator, which you can see if you join up on our website, is telling us that Ethereum probably is going to go, I don't know, 26 to 2,500 at least. It may not do it today because today's like a fear day. We may be alternating between everything is terrible and everything is fine. For the moment, the moving average crossover in Ethereum is not positive and could lead to more downside. Now, in Bitcoin, it's the same thing. In this case, the 21-day moving average is crossing the 50-day. Back when this happened for sell in May and go away, there was actually a little bit of a rally before Bitcoin really fell apart. But the moral of the story is when the 21-day in green crosses below the red line, which is the 50-day moving average, just this year, it's been a pretty good signal that, you want to have half your portfolio that you hodl, and you want to have a portion of your portfolio that's somehow either protected or used for trading, not investment advice. I can't wait till this legacy situation is cleared up, but that doesn't look like what it's going to be like today. In the S&P 500, you have a big down day today, okay? If there's going to be defaults and problems with banks in China, that's going to result in problems all over the world. The legacy word for it is contagion. So if there is going to be this type of problem, stocks are going to get hit. We talked about that yesterday. Stocks fell below the 50-day moving average. That's the red line. And to keep it simple, all right, because I know you want to get to the altcoins, so keep hitting that like button because we're getting there. But the stock market looks like it literally could go straight down as a result of this head and shoulders top that has this strange downward sloping neckline. So if, keyword, because stocks have this habit of going down and bouncing back, but if stocks really start going down sharply, okay, you could have a 10% down move or more. QQQ, that's, Apple, Amazon, Netflix, Google, Microsoft. A lot of evidence that smart money was selling to small retail traders. QQQ hit the red line this morning and yesterday at the 50-day moving average and then fell out of bed. So there might be a bounce. Tomorrow might be an everything is okay trade. But folks, this is not good. Legacy is impacting crypto because remember, crypto is a risk asset. Altcoins require a flow of money to come in consistently in order to maintain prices. That's why I want you to keep some cash so that if this thing really falls, you can jump in. Because legacy is telling you that there's trouble. Now, there's a different kind of trouble brewing. So not only do we have Evergrande, okay, but we've got a government shutdown and a debt ceiling problem, which is a nice way of saying America is running out of money, right? They don't even have permission from Congress to run the printing press. Now, normally, this affects short-term government bonds because everybody goes, oh no, are they going to shut the government down? Are we going to get our payment on our little 30-day treasury bill or IOU? Okay, that's not what's happening. What's happening is long-term bonds, 30-year bonds, the interest rate is rising. Normally, long-term bond interest rates fall when people get worried about stocks. Like, oh my God, stocks are doing bad. Let's buy bonds, which drives the yield lower. Those three big green candles that look like they came out of an altcoin, that's the interest rate that people are charging America for a 30-year loan. So the credibility of America is in question at the same time as sort of a contagion problem is unfolding with a massive, massive Chinese real estate developer. So if you're wondering, you're like, gee, isn't this supposed to be good for crypto? Yes, eventually, but not right now, not in this phase. And here's another reason why: the dollar. Oh God, this chart breaks my heart, right? The 21-day moving average is bouncing off the 50-day moving average. So the dollar is actually breaking above resistance, okay, which I swear I thought I'd never see this, but I'm seeing it, right? Every big mistake starts with denial, and I would be mistaken if I denied what was happening on this dollar chart. Now, why is the dollar going up if there are all these problems and questions about U.S. credibility, et cetera? Well, in the emerging market world, right, that's outside of like the G7, right, South America, Asia, Africa, if people have a hard time borrowing dollars, or when people get scared, in the legacy world, they run into the dollar. So stocks are falling, fear. Bond yields are rising, more fear. The dollar is going up, even more fear. So it's like a fear sundae with a cherry on top, and it really doesn't taste good. It's actually quite scary.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.